Good afternoon, everyone. This is Joe Bacella, webinar organizer here at Chaikin Analytics, and I'd like to welcome you to our presentation of Trade Options Like an Expert, Marc Chaikin's Best Options Secrets. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics. Now, as a reminder, this webinar is being recorded, and a copy will be sent to everyone who has registered. Please submit your questions throughout the webinar using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Now, before we get started and bring Marc on, we have a quick video to begin the presentation. Enjoy.
85% fundamental, 15% technical. And I created the model because self-directed investors didn't really have the tools and the discipline to successfully manage their own money.
And that's created by famous analyst and entrepreneur Marc Chaikin.
I'm a big fan of Marc Chaikin, though, so it makes me nervous, Scott, because I like his metrics of looking at the market.
Marc Chaikin.
Marc Chaikin.
An expert known on Wall Street for developing computerized stock selection models.
Joining us is Marc Chaikin. He is the founder of Chaikin Stock Research. Mr. Chaikin, welcome.
Thank you, Joe, and welcome everybody. That little sizzle reel is sort of to get my juices flowing, but it also shows you some of the validation that we've gotten at Chaikin Analytics for what we're going to be talking about today, which is a way to summarize fundamentals quickly and easily with confidence so that your options trading improves by reflecting a combination of fundamentals and technicals. And that's what I've been doing in 50 years on Wall Street. For 45 years, I've been using technical analysis in conjunction with fundamentals to create better strategies for traders and investors. I headed up the options department at a fine regional firm called Tucker Anthony and R.L. Day, 20 branches, 250 brokers, tens of thousands of options traders. And I can tell you up front that 95% of those options traders lost money. And we're going to very early on in the presentation tell you why, and then spend the rest of the presentation showing you how you can be part of that 5% who do make money. So along the way, I've been mentored by some of the most successful, smartest institutional portfolio managers. Some of them were colleagues, some of them were clients. And the reason that's important is that everything I learned from them, value investors, hedge funds in New York, growth investors up in Boston, everything I learned from them is embedded in the Chaikin Power Gauge rating, really the culmination of my life's work. A way to very quickly, as I said, and confidently know what the fundamental potential for a stock is, and we're going to show you how important that is for options trading success. So we're going to cover 5 keys to successful options trading, and the bottom line here is that by combining fundamentals with technicals and then using Chaikin money flow, you'll really be able to have the complete picture and develop option strategies, knowing exactly what you need to know to be profitable. Now, just to start off, how many of you are familiar with Chaikin money flow? It's been in the marketplace for 35 years. If you are, type a big CMF into the chat box, please. And Joe, let me know what type of response we're seeing, if you would.
Yeah, let's see that that window there for you to type in is available in the upper left-hand corner. Just go ahead and click on Q&A, and you can chat. And I already see there's one response here, and a few more trickling in right now.
Thank you, Joe. Well, Chaikin money flow is on every online brokerage platform. It's on Bloomberg and Reuters. It's been the go-to supply-demand indicator that professionals and individual traders have been using for over 35 years. And we're going to teach you a very specific tip that we've been teaching institutional money managers for over 30 years. It's a way to use Chaikin money flow to anticipate future price movement. Very important. And we're at the end of the webinar, I'm going to walk you through my process for picking the stock of the week in Chaikin Market Insights, which is something I write every week. So we'd like to start off with a poll. And the question is, are you thinking about a bear market? So Joe has put this poll up, and we're going to give you a few minutes to answer that. I think I get to answer it this time. I can tell you I'm bullish. Give you a little advanced preview.
Let's see. I see a lot of great responses coming in already. It looks like half of you already responded, so thank you very much. I guess we'll give that about 10 more seconds, and we'll see. All right. And we will call it there. Let's take a look at the results. And it seems pretty split, Mark.
Well, this is actually the most bullish audience we've had. Only 13% are bears, 45 are bulls, 42 are uncertain. This is really important because we have webinar partners that we periodically present to their audience. And one of our partners, a very, very famous macro strategist who's on CNBC all the time, has been bearish for quite a bit. And when we did this poll with his audience, 51%, and a lot of them are investment professionals, were bearish. This was about 6 weeks ago. So it just shows you how influenced we are by the people that we respect and follow. And what this webinar is going to be all about is becoming independent, being able to make your own judgments about stocks, even the market, and option strategies. So with that in mind, let's take a look at the market as a sort of backdrop to what we're going to be talking about with individual stocks, sectors, and industry groups. This is a one-year chart of the SPDR, the SPY. It's the most actively traded instrument in the US markets. It reflects the exact movements of the S&P 500 index. And it's been in an uptrend. Look at that wonderful uptrend channel. And notice that we had a little bit of a pullback here. And guess what? As soon as that pullback surfaced, the bears resurfaced. Oh, it's over. And then suddenly today, the Dow is making a new all-time high, as did the NASDAQ 100, and small caps turned around, and we're up at one point over 2% today. So how do we gauge the market? Well, one of the ways we do is by looking at Chaikin money flow. Now, Chaikin money flow, as we said, has been around for 35 years, and it's a supply-demand indicator. It measures institutional accumulation and distribution. Joe, I think you have to mute yourself if that's okay.
Muting myself now. I just noticed that. Sorry.
Thank you. So what's this chart showing us? Well, institutions use the SPY to get equity exposure when they don't want to bother with picking individual stocks. And when you see mountains of green and Chaikin money flow, whether it's on a stock, an ETF, or an index ETF like the SPY, it means that there is persistent accumulation going on. Notice that in the last year, there's been almost no patches of red, just this pullback that we had in August down to support. And I wanted you to pay particular attention to this red stop sign here in March, because the next slide is going to address that. In March, there were a lot of bearish people around. The market did a little bit of a correction. It didn't amount to even 3%. How do we know that? Because the last 3% correction was just before the presidential election in 2016. The last 5% correction was after Brexit in June of 2016. So this market's been in a straight up glide path, but yet the bears come out in droves. So I have a quote here from the New York Times, March 31st of 2017. The S&P 500 was about 2360. Caution signals are blinking for the Trump bull market. Despite an 8-day losing streak that ended on Tuesday and yada, 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 bottom line is the market has rallied 10% since then, up to 2,600 on the S&P. You've got to ignore the headlines because earnings move markets. Gurus don't move markets. Longevity doesn't end a bull market. Valuations don't end a bull market. It's all about earnings. And we've been saying this in Market Insights for the last 9 months. We're in a global economic expansion in the US. We just completed third quarter earnings season reports. They were fabulous, especially in the tech sector. And not only are companies beating analyst estimates in terms of bottom line earnings, they're beating in terms of top line revenue. And that's really important. When revenue is expanding, instead of seeing the bottom line improve because of cost cutting, you're getting the dual effect of more revenue and more profitability. So what's really important is not what the gurus are saying. It's the trend of the market, and we've seen that that's up. It's the trend of corporate earnings. It's finding the right sectors and industry groups, because you can improve your options trading by focusing on strong stocks and strong industry groups for your call trades, and weak stocks and weak industry groups for puts, and stock selection. Those are the four things that are important. Now, In case you don't believe me, or in case you're part of that 20% that's bearish, here's how you hedge your portfolio against a November, December decline. Earlier today with the S&P at 2581, I used our options play ideas module, which is embedded into Chaikin Analytics that we've licensed from Options Play, to find a bearish vertical put spread. This is a debit spread. You would be buying the December 258 put on the SPY, expires on December 29th, so 6 weeks to go, and you'd be selling the December 250 put against it. So there's an 8-point spread there. What this basically says is that there's better than a 300% return potential with your total risk at $196 per spread. If the S&P does what I'm not thinking it's going to do and drops to 250 between now and December 29th, potential to make over 300%, knowing your risk is limited to the cost of the spread. Much better than buying the put outright, especially in a market that hasn't even seen a 3 to 5% correction. You can also hedge a portfolio. Let's say you've got a 401k plan with $250,000 in it. You buy 10 of these spreads for less than $2,000. You can hedge that portfolio against a 3.5% risk, stay long, and enjoy the upside that I think is coming between now and year end, when I think we'll see at least 2650 on the S&P 500. Now, none of these ideas, even this options strategy, are meant to be recommendations. We're not registered with any state or federal agency. These are just for educational purposes only. But can you see the power of using options to have big profit potential on the downside with limited risk, or hedge a portfolio? That's what I want you to see in this opening slide. Now, we've covered a lot of ground already in the first 7 minutes of the webinar. We've talked about the trend of the market. We've talked about the importance of earnings. We've talked about option strategies to hedge. And we've sort of encapsulated the biggest problem that we face as traders or investors: too much information. It's called information overload. And it's the biggest impediment to trading profitably, whether you're swing trading or trading options. You need a focus, and information overload. Everything in our inbox, in Twitter, on Facebook, and CNBC is a distraction, and you've got to learn how to focus. So at Chaikin Analytics, we created the Chaikin Power Gauge rating, and we're going to go through all of the factors in the model and the performance so that you have some confidence by the middle of the webinar that there is a way to monitor the fundamentals without having to be an MBA or a Wall Street analyst. So what we do is we take the data on the right, which for me would be unintelligible in terms of making a trading decision, and we do what's called taming big data. Big data is a watchword. Companies in the big data area, AI and so forth, is another way to tame big data. We distill everything down to that gauge on the left, and I just can't get myself to take away that power gauge display, because for a webinar that we did at the end of March, Lam Research, semiconductor equipment manufacturer, had a very bullish power gauge rating. It was trading at 127.80, so I created this slide for that webinar roughly 8 months ago. And guess what? The stock is trading above 200. So I'm not getting rid of that slide because the stock still has a bullish rating, as you'll see. So our solution for information overload is Chaikin Analytics for both iPad and desktop. We're going to walk you through our approach to making money in the options market. It's important to note that we've gotten acceptance and validation by some very smart publications and participants in the market. Some of them are partners like Simpler Trading. Jim Cramer is becoming a partner. I was the featured speaker at his live teach-in in New York City at the Harvard Club 2 Saturdays ago. Some of our old institutional clients like Fidelity, Soros, and now Paulson Hedge Fund have come back as clients. So they're using the same tools that we're going to be showing you in terms of how you can benefit your options trading. And of course, we've been written up in Forbes and Barron's and been on CNBC. And the whole point of this is that this isn't a fly-by-night fundamental quantitative rating scheme. We've been in business for 8 years. My wife Sandy and I founded the company in 2009. We're now 26 people here in Philadelphia. So we've gotten acceptance because the power gauge rating is working, and we'll show you that very crystal clear in a minute. So how does Chaikin Analytics improve your options trading? It does this by giving you a directional edge. Now that's what the 95% of the people who were trading options at Tucker Anthony and RL Day in the 80s didn't understand. They didn't understand that to trade options successfully, you need a directional edge. You have to have some sense of where a stock is heading from a fundamental point of view. We all use technicals, or many of you use technicals, and that's wonderful, but you're only seeing a small piece of the pie or the puzzle. You need to know the fundamentals. So we give you that directional edge by combining fundamentals with technicals into a multi-factor quantitative model, making it easy to interpret and understand, and then we give you 6 pairs of buy and sell signals for better entries and exits. Now, we've developed a methodology at Chaikin that's encapsulated in this pyramid. Successful investing demands a disciplined methodology. Successful trading even more so. So at the top of the pyramid is the Chaikin power gauge rating. It looks like the gas gauge on your car. And industry group strength. We think that's very important. We're going to cover that in the webinar, and how you can know which sectors and industry groups are likely to outperform based on fundamentals. At the bottom, just 2 technical indicators, Chaikin money flow and Chaikin relative strength. We have a unique way at looking at relative strength that we're going to show you in just a minute. And then Chaikin buy and sell signals, because obviously if you're an options trader, entries, timely entries are quite important because of time decay. So we have 2 patterns I'd like to share with you as a sort of teaser before we explain what's in the power gauge rating and why it works. One of them we call classic Chaikin bulls. These are stocks that have a bullish power gauge rating, meaning that the fundamentals for that stock are positive, suggests that the stock is likely to outperform the market. We want stocks that are outperforming the market, and I'll explain why in a minute. And we'd like Chaikin money flow to be strong, indicating that institutions are accumulating the stock. So here's our poster child for the classic Chaikin bulls. Applied Materials, it's a semiconductor equipment manufacturer. The power gauge rating has been bullish almost unilaterally for over 15 months. This is a 1-year chart from Chaikin Analytics. The power gauge rating is that green yellow ribbon at the bottom. There's no red because the power gauge never went bearish. Right above that, Chaikin relative strength. We love converting numbers into pictures so investment decision makers, traders, investors can use this information effectively, fast and easy to make investment decisions. So why is relative strength so important? Because no matter how good your fundamental research is, whether it's quantitative or traditional fundamental, or no matter how good your guru is on CNBC or in the service you're subscribing to, if the market doesn't agree with you, the market always wins. My old friend Marty Zweig used to say, listen to the Fed, watch the market, because Mr. Market always wins. So at best, if the market disagrees with you and your fundamental outlook is bullish, you've got dead money. At worst, as you'll see, you're in a position where you really need help. Above that, Chaikin money flow. And we see that the institutions on Applied Materials continue to buy the stock. And then we highlight earnings. Every quarter when they report, a company will either beat or disappoint Wall Street expectations. Applied Materials has a pattern of positive earnings surprises. And right at the top, we show you when the next earnings date is. So Applied Materials was due to report earnings after the close today. And our earnings alert indicator said that analysts are raising their estimates and expect a positive earnings surprise. And sure enough, after the close, 4:01, company reported yet another positive earnings and revenue surprise, took a little bit of profit taking, as it often does and then the stock is now moving back up again. It was actually up today in anticipation of a positive earnings surprise, and it's now trading at the high of the session in aftermarket trading. And then on the screen, these green triangles are one set of our buy and sell signals. This is what we call our relative strength buy signal. This is a really important signal for options traders and swing traders. Why is it important? Well, first of all, it's very simple. If a stock is outperforming the market, and we see that down here, the relative strength indicator is green, not red, dips below its 21-day average and then trades back above it, that triggers a relative strength buy signal. That signal works 70% of the time as we've back tested it. More importantly, it persists for 4 to 8 weeks. So for an options trader, what that means is you can put on an options position. You don't have to use weekly options or options that are due to expire in 4 to 6 weeks. You can actually ride out a couple of cycles, maybe even buy an in-the-money option so that you're going close to point with the stock. You can put on a vertical call spread with a wider duration, wider spread between the buy and the sell price, and take advantage of this 4 to 8 week move that's likely to happen, especially in a stock where the power gauge is bullish. So Applied Materials came through yet again with a positive earnings surprise and trading well after market. Now, for a webinar I did on May 24th, I used our screener to find classic bulls. Now, it's nice to know that there's a pattern that works in terms of selecting stocks that are likely to go up, but how do you find them? So we have a screener, and I started with the Russell 3000, required that the power gauge rating be very bullish. Then I went to our two go-to technical indicators. I wanted strong money flow and relative strength, and I just added one other factor, relative strength, earnings surprise, just what we've been looking at in AMAT. I want companies that were consistently reporting positive earnings surprises. We distilled down the Russell 3000 to just 13 stocks. We were looking at mid and large cap names. In the 6 months since this screen was done, the S&P 500 is up about 6.1%, and this portfolio of classic bulls is up 3 times that, 18%. Only one of those stocks is down. 12 are up. Everest Re is down, and they ran into a buzzsaw in the reinsurance business after the 2 hurricanes in Houston and in Florida. So what's the other pattern? Classic Chaikin bears. Power gauge rating is bearish. Stock is underperforming the market, and Chaikin money flow is red, not green, telling you that institutions are selling. So our poster child for the last 9 months, because these stocks persist for long periods of time, was Under Armour. The power gauge turned bearish off the charts at $40. This chart shows the stock beginning at 32 a year ago, and it's stayed bearish ever since. You've had a series of negative earnings surprises. Those are these big gap down. It's been underperforming the market, so the market agrees with the model. So you've got your directional edge from the power gauge, you've got relative strength confirming it, and institutions selling. And we know that because Chaikin money flow is consistently red. Even now, Under Armour has gone from a large cap favorite of the hedge funds to a mid cap stock. And if it doesn't get its act together, this is going to be a small cap stock very shortly. So what happened just 2 weeks ago? Another negative earnings surprise. The stock, which looked like it had bottomed out at 16, traded all the way down under 12 in response to that negative earnings surprise. It's never too late to sell a stock where everything's lined up against it. We'll get a slide from Warren Buffett affirming that. Applied Materials now trading at 58.13, new all-time high. Now, the power gauge rating is at the heart of everything we do at Chaikin Analytics. So let's spend the next 5 minutes looking at the power gauge rating, what's in it, and why does it work? Well, the display is very simple, but please don't confuse simple with simplistic, because there's a lot of number crunching going on under the hood. In fact, I've said on webinars like this before that the power gauge rating is like a Chevrolet with a Ferrari engine under the hood. And it can be your GPS during earnings season. It can point you toward being long a stock like AMAT or short a stock like Under Armour, doing the appropriate options positions. We favor vertical put and calls credit spreads as a high probability way to trade during earnings season and trade the options market. Now, one of our partners, John Carter, who's probably the best pure trader I know, he runs a trading room called Simpler Trading. He's really a great trader. I have friends who are in that chat room, they're retired, and they say, if you stay in that chat room all day long, you're going to make a lot of money. Well, John Carter got exposed to the Chaikin Power Gauge rating and looked deeply into it and said, you know what? This looks like an objective, awesome meter for stocks. There are a lot of hyped up tools, but when I find something interesting, I'm going to let my people know about it. So you can imagine that a single tool that combines 20 plus technical and fundamental factors to anticipate a stock's potential got my attention. It's called the Chaikin Power Gauge rating, and at first glance, I thought this looked like an objective, awesome meter for stocks. So what is it that got John Carter so excited? Well, the Chaikin Power Gauge rating has 4 primary factors that cover growth, value, technicals, and sentiment. And within each of those 4 primary factors, there are 5 sub-factors. The reason the model has worked since it was first introduced in January of 2011, and by the way, the model was locked down, meaning that the factors haven't changed, the weightings haven't changed, because each of these has a different weight, was locked down in September of 2010. So why does this model work? It works because it wasn't built by a academic, by a PhD out of MIT throwing digital spaghetti on the wall. That's what got us in trouble in 2008 and in 1998 in the long-term capital management. Models that were built by academics, college professors, who didn't understand how Wall Street works. This model reflects the factors that successful active investors look at every day, successful portfolio managers. They all have different styles and time horizons. So to build an effective model, which I did in a 1-year research project, right after we started Chaikin Analytics, you need to look at the factors that all the different Wall Street constituents look at. So value is 35% of the model. Within value, price to sales and free cash flow to market cap are the most significant weights. They're 22% of the model. Excuse me 1 second. So if that sounds like Warren Buffett, it should, because that's what he looks at. But even before Warren Buffett, Graham and Dodd back into the 30s and 40s, buy $1 of revenue on the cheap, don't pay too much for assets, don't pay too much for sales. So the value metrics are 35% of the model. They don't change very often. Then we have more sensitive factors like earnings surprise, and we saw that in AMAT. And what I learned from a colleague at Drexel Burnham in the mid-'80s who did the original research papers on earnings surprise and earnings estimate revision, George Douglas, who's still running Quant Money 40 years later or 30 years later out in Santa Monica, is that earnings surprises come in bunches. There's never just one of them. And we saw that just now in AMAT, Under Armour. The retail stocks have just been a disaster. What then happens is that analysts raise or lower their earnings estimates in response to positive or negative earnings surprises. It's been completely documented by academics, because sometimes we do like their research, that earnings estimate revisions by Wall Street analysts, the single biggest short-term driver of stock price movements. So we've got value factors that don't change very much, and then we've got earnings surprise and earnings estimate revision. The secret sauce for the power gauge rating, in my opinion, the sentiment factors. There are a lot of quantitative models out there. We're going to talk about how the Chaikin Power Gauge is being used to manage $300 million right now. But very few of those quantitative models have these sentiment factors or expert opinions. What are the short sellers doing? Are the insiders buying their own stock? Is the industry group strong? Are the analysts raising or lowering their estimates? That's the secret sauce of the model. The bottom line is it works because it's based on how Wall Street works. So what's the sort of performance of the model? Well, using the Russell 3000 as our universe, in 2016, which was a very bullish year, 32% was the average performance of the very bullish stocks in the Chaikin Power Gauge system, 428 of them at any given point in time. No fat tails here or thin tails. not cherry picking. The very bearish stocks in a strong year up 9.5%, less than the market. And look at that spread of almost 2,200 basis points between the very bullish and the very bearish stocks. If you're constantly trafficking in very bearish stocks, you're bottom fishing. I'm going to explain what that is for those of you who don't know the term and why you should not do it. If you focus your long trades on very bullish stocks in strong industry groups, and you focus your put trades in very bearish stocks, you're going to immediately improve your performance. Now, in 2015, that was absolutely critical. Why? We've often asked, well, how will Chaikin help me in a bear market? You know, we launched in 2009. We've been in an 8.5-year bull market. And what happens in a bear market? Well, we had a bear market in 2015 in energy. And the power gauge rating was very, very effective, as we'll see, in finding stocks in the energy sector to either short, avoid, or use as put candidates. Because the average very bearish stock in the Russell 3000 was down over 17% in 2015 in the middle of a bull market, because small caps were in a bear market then as well. A lot of the small cap energy stocks, but financials and so forth. So you need an objective guide. Now, one final proof point. We have two partnerships, one with NASDAQ and one with New York Life Insurance, the largest mutual insurance company in America, and their investment management subsidiary, Index IQ, is one of the companies they own. They create exchange-traded funds. So in 2014, NASDAQ had done their due diligence, stress tested the Chaikin power gauge rating, came to us and said, we'd like you to create 3 NASDAQ Chaikin indices, large cap, small cap, and dividend achiever, based on our 3 large, small, and dividend indexes. Only one caveat: we rebalance our indices once a year on April 1st, so whatever portfolio you put together using your discipline methodology and the Chaikin power gauge has to stay in place for 12 months. That's a pretty tall order. Well, the bottom line is all 3 NASDAQ Chaikin indices have significantly outperformed their benchmarks since inception on April 1st of 14. It's almost 4 years in. And because of that, New York Life in February of 2017 licensed all 3 NASDAQ Chaikin indices, registered them with the SEC with the purpose of introducing exchange-traded funds based on the NASDAQ Chaikin indices. The first one that was launched was the IQ Chaikin Small Cap ETF. The symbol is CSML. This is not, I repeat, not a recommendation to buy CSML, but the performance and the assets under management have been spectacular. As of the close today, $300 million in assets. It's the most successful equity ETF launch of 2017. And believe it or not, there have been over 190 ETFs launched in 2017. CSML has gathered the most assets in the equity space, and it's been performing. It's the second best performing small cap ETF of 170 small cap ETFs. So not only are advisors using this to allocate client assets, but people like yourselves, individual traders, are using it as an alternative to the IWM. What's the takeaway here? The takeaway is a disciplined methodology that incorporates fundamentals like the power gauge rating can help you trade better and invest better. So let's dive in to what's special about Chaikin and our approach to profitable trading. We have 3 important indicators, 3 key indicators, and 3 important takeaways. The third one is going to be sharing a tip, as I said, that we've been teaching institutional investors for over 30 years. So the first one is called the dynamic duo. That is the combination between the Chaikin power gauge rating and Chaikin relative strength. That's how we combine fundamentals with technicals. So the dynamic duo finds big winners and losers. With one caveat: relative strength on both the upside and the downside stands alone as a bullish or bearish indicator. We'll see that when we look at General Electric in a few minutes. So the dynamic duo is very important. You want the market to agree with the model. Here are 2 examples. Cigna. At the bottom is the Chaikin power gauge rating. It's been bullish on Cigna for well over a year as the stock, this very large cap insurance company, has gone from 130 all the way to 200. Nice dividend yield. Relative strength has been strong. Dynamic duo in play since January. Market agrees with the model. Institutions buying it. This is another one of our buy and sell signals. It's great for options trading. It's called our oversold buy signal. Now this I owe to Larry Williams, who's been a long distance mentor to me. I built my money flow indicator based on the research that he had done in the 70s on accumulation and distribution. Larry Williams is a great trader, and he came up with a simple pattern. He said, if you like a stock and it makes a new 8-day low, that's a good low risk entry point. Well, we take it one step further. It has to have a bullish power gauge rating. The fundamentals have to be favorable in our model. And then when the stock gets oversold and makes a new 8-day low, that's what we call our oversold buy signal or overbought sell if it's rallied up. Now, that signal works about 2/3 of the time, but it has a shorter time horizon than the relative strength signal, 5 to 10 trading days instead of 2 to 4 months. So it's really meant for shorter term trading, swing trading. It's going to fail occasionally. That's okay. Nothing works all the time. You can go to our website, ChaikinAnalytics.com, and see all 6 pairs of our buy and sell signals explained, whether you're a subscriber or a visitor. We try to be transparent. Now, here's the dynamic duo on the downside. This is a drug stock called Tesaro. Power gauge turned bearish in March of 2017. The stock was around 150, 145. And then relative strength turned bearish at about 145. So the dynamic duo was bearish. Institutions were selling it along the way. You got these overbought sell signals on a new 8-day high. Look how effective they were for initiating swing trades or options positions on the downside. And then just ahead of earnings, after the Kramer teach-in, when I used Tesaro as an example of a bearish dynamic duo, you got another negative earnings surprise. The stock, which again looked like it was bottoming out at 110, gapped down from 110 to below 90. Another 20-point drop after a bearish earnings surprise. You do not want to guess bottoms or bottom fish in stocks like this. You want to put on a low risk put position ahead of the earnings reports. And 2 out of 3 times or more, you're likely to be profitable on that trade. And we can see at the top, analysts are lowering their estimates. The old estimate was 238 a share for the next quarter. They've now lowered that to 231. Remember, I said analyst estimate revisions, single biggest short-term driver of stock price movements. That's why this stock is having a hard time bouncing off a new 52-week low. Now, the second pattern I'd like you to take away is what I call the key to making and keeping profits, and that's spotting personality changes. We define a personality change as a stock that has been outperforming the market that begins to underperform the market, or vice versa. Now, why is that so important? Well, as we'll see, not only do individual traders put their feet in cement, but analysts put their feet in cement as well. And if you put your feet in cement, have a hard and fast opinion about a stock, you're not going to spot these personality changes, and you're going to be on the wrong side of big moves. So here's a stock in the solar energy business. Had very bullish ratings back in the $60, $70 area 2-3 years ago. Power gauge was bullish. Goldman Sachs had a $100 price target. That never came to pass. Power gauge rating turned bearish. The stock went into a downtrend. In March, it made a new 52-week low. And then in April, after a positive earnings surprise and a gap up, the power gauge turned bullish and the stock started outperforming the market. So you had the dynamic duo in place, but we call that a bullish personality change. So how do you use that to make a profitable options trade? Well, after a bullish personality change, you're looking for that first buy signal. Here's our relative strength buy. Notice how it works for 4 to 8 weeks. Came at about 37. Another positive earnings surprise, gap up, pulls back to digest the move, and then another relative strength, buy, spike up to the upper band, great place to take profits, especially if you're trading shorter duration options, and then another chance to buy back in, and yet another positive earnings surprise. So since that bullish personality change, First Solar has gone from 36 to 62, and multiple chances to establish a call option position by the stock for a swing trade. Very critical that you know that the downtrend is over with some degree of confidence. Now, here's a very recent bearish personality change in a stock that's all over the tape today, Tesla. Elon Musk promoting the stock yet again, his new semi-truck. But the power gauge has a different view of things. It turned bearish, and you got a bearish personality change here in late September. And then you look for this first sell signal, which you got in October at 360 under our long-term trend line. This is a double smooth 200-day exponential average for the technicians out there. So you could have bought put options with the stock at roughly 358 on the way down to 290, because just 2 weeks ago, negative earnings surprise, the stock had been 325. It spiked down to 290. You've got to spot these bearish personality changes to protect your capital, and here's a dramatic example of that. SunEdison was the darling of the solar energy stocks. The hedge funds loved it. Merrill Lynch loved it. No knock on Merrill Lynch. But this chart begins in 2015 and ends in April of 2016. The stock peaked at about $30. Chaikin money flow turned red and stayed there. That tells us the institutions were selling the stock. Power gauge turned bearish, and you got a bearish personality change. So the dynamic duo was in place, and you had negative earnings surprises and opportunities to buy put options when it broke down here below 25, and then along the way. This chart ends in April of 16. Why? Because the company filed for bankruptcy. Now, Merrill Lynch did put out a sell recommendation on this in February at $3 a share, down from 30. That's why I said that analysts put their feet in cement as well as individual traders and investors. And that's no knock on Merrill Lynch. This happens at every brokerage firm on Wall Street. They lose sight of what's going on. By the way, Applied Materials trading at 59.50 now. It was 56.50 when we started the webinar. So you needed to be aware of the bearish personality change to protect your capital if you were long SunEdison. And we got this testimonial from a Merrill Lynch broker who saw our booth at a options trade show. And he said, wait a minute, could you go back to that, please? Turns out he was from Philadelphia, where we're headquartered. This was in California. He said, if I had only had Chaikin, I could have saved a lot of pain and money, because I averaged down on SunEdison at 15 because Merrill Lynch was still recommending the stock. If I had been using Chaikin, I could have really saved myself and my clients a lot of money. And that's what you've got to be doing as options traders. Spot the personality changes, take advantage of them, turn them to your favor. Now, I promised you a secret that we've been teaching institutional traders and investors for over 30 years. We call it the secret sell signal that 95% of traders never see. It's a bearish Chaikin money flow sell alert. And here's how it gets triggered. And by the way, Chaikin money flow is on every one of your online brokerage platforms, Reuters, Bloomberg, stockcharts.com. So you don't need Chaikin Analytics to find these. What we do is we combine the fundamentals and the technicals with the signals and the patterns, all in one place. So how do you trigger a money flow sell alert? It happens when a stock like Advanced Auto Parts trades up, either making or equaling its old high near the upper volatility band, as it did back here in January of 17. And instead of Chaikin money flow going green, telling you that the institutions are buying the stock, it stays red. What does that say? It says that institutions, smart money, is selling the stock under cover of strength. Maybe an analyst recommended it. Maybe there was a hedge fund buying the stock, but smart money was getting out. Therefore, Chaikin money flow stayed red. That's your bearish money flow sell alert. It came at 170. the stock had a series of negative earnings surprises. In April, we featured it as part of the auto parts group, 3 stocks to sell. It was 150 at that point, bottomed out at 80, as you'll see later on in the webinar. You could have gotten out at 170 and started looking for short sale opportunities. There's your bearish personality change. That's when you want to look for it, not right at the top, but at 150. Now, you could have sold out your long positions there. You could also short it, put on a put position at that point, but you want to see some confirmation. Now, here's what happened to Advanced Auto Parts. It ultimately bottomed out at 80. This is why I think bottom fishing is the most expensive sport in America, because along the way, at 100, analysts were saying, real value here. Take a look. Might be the time to buy it. Then you get another negative earnings surprise. The stock goes to 80. It rallies. Get a relative strength sell signal. Sells down below 80. And then 2 days ago, what happened? Positive earnings surprise. Right out of the blue. And the shorts started covering the stock. Pre-market. It was trading up above 100. And because I like to follow up our recommendations for our clients, I tweeted, Advanced Auto Parts beats estimate, but same-store sales dropped 4%. That's not good. Chaikin Power Gauge is still bearish. It would take a close above 100 to break the downtrend. Don't jump on this train. And sure enough, the stock spiked up, made a high of almost 103 just 2 days ago. And today it was trading at 90. So what the power gauge did was to help you avoid getting sucked in to what looked like a reversal in the stock price. Will that work every time? Absolutely not. Nothing does. But follow the discipline, as you'll see, and your options trading will improve dramatically. Now, here's another bearish money flow sell alert. The aerospace industry group was very strong all through the summer into I'd say, early October. And rocket stocks are all the rage. In fact, Northrop Grumman made a bid for a company called OA Orbital, 25% above the market, and it caused stocks like Aerojet Rocket Dynamics to skyrocket, no pun intended. We had an oversold buy signal, a money flow buy signal, and the stock went from 28 all the way to 36. And everything looked great, except as it tested that old high, the same way Advanced Auto Parts did, look what happened to money flow. Smart money was getting out of it. Just as individuals were getting sucked in, getting alerts from their trading system that the stock was making a new 52-week high, smart money was selling it, and you want to be selling it with them. And you want to ignore any buying opportunities after a money flow sell alert. They're all off the table. Respect that. And then now the power gauge has actually turned bearish, which is highly unusual to swing from bullish to bearish that quickly. Third, money flow sell alert, Chipotle, the exact same pattern. Patterns repeat over and over and over again on Wall Street. That's why this webinar is so important. If you embrace these disciplined approach, Chipotle, the power gauge actually turned bearish at 700 off the charts before the E. coli crisis surfaced. But here in April and May of this year, it had rallied from 360 to 500. Money flow was positive, and then you tested the high and look at the money flow. Were the institutions buying the stock at that point? Hell no, they were selling. Smart money was getting out. Then the stock broke down, bearish personality change, bearish power gauge, institutions selling like crazy, negative response to earnings. You actually rallied into the last earnings report just 3 weeks ago, and guess what? Another negative earnings surprise, and the stock gapped down from 320 to 280. And if you had put on a low-risk put position or done a vertical bearish put spread ahead of that earnings report a day or two before so that premium erosion doesn't affect you, imagine what your profits would have been, 3 to 5 to 700%, depending on the position, just by knowing that the power gauge rating and the earnings surprise indicator were bearish. Now, everything we've been looking at is what I call the ideal setup. Power gauge rating, relative strength, money flow. Warren Buffett has famously said that they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. He calls it the fat pitch. I call it the ideal setup. Now, once you've had the ideal setup, what's the missing ingredient? It's the signals. So 6 pairs of buy and sell signals filtered by either relative strength or the power gauge rating. So always trying to give you that extra edge, that directional edge. Now, just as with the classic bulls, knowing that there are signals that work is only half the battle. You have to be able to find them and know when they occur. So we created dashboard alerts in our iPad app and our desktop. And for a webinar I did in in August of this year, my signals window showed me a series of buy and sell signals on August 10th. One of them was an oversold buy on Boeing with the stock at 234. It could have been on Anthem Health. It could have been on Intuitive Surgical. Michael Kors at 45 on the way to 56. And then a sell signal on Bed Bath & Beyond, relative strength sell at 29.78. So let's see how they worked out. Well, the buy signal on Boeing came right after a spike up and a positive earnings surprise. I don't like to buy there. I want to wait for sideways to down movement. You got it, 8-day low, oversold buy signal. Not many people would pull the trigger on that trade. I'd have a hard time pulling the trigger. But if you follow the signals, you'll trade more profitable because any entry point based on a discipline that uses proven analytics is better than trading on your emotions. Now, my wife, Sandy, who's become the prototypical keep it simple and follow the discipline, has become one of the best stock pickers I know. She actually bought Boeing on that buy signal, something I would have a hard time doing, and it went from 234 to 262. Then you got a positive earnings surprise, but you got selling on the news, and you got another entry point oversold buy signal, came at about 255. The stock rallied again to 262. So these signals work over and over again. Now on Bed Bath & Beyond, even more impressive. Right at that red arrow is where that relative strength sell signal came, 29.78. It came in the middle of 2 earnings reports. Prior to each of the earnings reports, we got a relative strength sell signal. Look how profitable they were. Relative strength sell, you're expecting 2 to 4 months on the downside, negative earnings surprise, gap down, rally up, you get that next relative strength sell, almost at $30, trades immediately to 26, trades up into the earnings report. I can't tell you how many times that happens on Wall Street. Stock with a bearish power gauge rating rallies ahead of an earnings report. So why does that happen? Some of it's short covering, some of it's wishful thinking on the part of Wall Street traders, thinking that maybe this time the company will turn it around. Well, maybe it's not good enough if you're an options trader. So relative strength sell, after that one, negative earnings surprise, the stock drops all the way to 20, and it's having trouble getting out of its own way. It dropped under 20. And it's still looking terrible. Do not bottom fish in stocks like Bed Bath & Beyond. The next earnings report is due out December 20th. Analysts are lowering their estimates. Our earnings alert indicator is red, telling you that stock is likely to report another negative earnings surprise. Now, we talked about how important groups and sectors are. Research by Zacks, Investors Business Daily, Standard & Poor's has proven over the years that strong stocks and strong industry groups go together. So if you are trading on the long side in strong stocks and strong sectors and industry groups, you've got a tailwind. That's another directional edge that we believe in. On the other hand, if you're trying to bottom fish in weak stocks, that's huge headwinds. Unlikely to make money on the long side unless you're very lucky, but it's a great way to find short candidates. So let's look at that for a minute. We look at the 10 Select Spider Sector ETFs. I know many of you trade these. It's a very simple way to get exposure to a sector like technology or financials or energy. So we're going to zero in on 3 sectors: technology, energy, and consumer staples. Now, technology has been the alpha dog that's been leading this bull market higher. We saw that again in Applied Materials today after the close, trading at 59.25 right now, new all-time high. So technology is strong, not just on a momentum basis, but based on something we call the power bar. How many stocks within a ETF index list have bullish versus bearish ratings? So financials, utilities, healthcare, and technology all have more bullish than bearish rated stocks. Energy, which had 0 bullish stocks just 2 weeks ago, now has 5 bullish rated stocks. Consumer staples, that's been the real dog sector in the market, 3 bullish, 11 bearish. So let's take a look at technology. This is a 1-year chart of the XLK, the Select Spider Technology ETF. These are the large cap tech stocks in the S&P 500. And we don't yet have a power gauge rating. We will by the end of the year that combines fundamentals and technicals. But relative strength is your best friend when you're trading sector ETFs. And notice how strong the XLK has been since January. And notice how the institutions have been accumulating it. No selling pressure whatsoever. They want a technology exposure. Every time the stock dips, they're buying in, and you should be too. But you can increase your profitability by looking for the strongest stocks with strong power gauge ratings in the tech sector. So right at the top, there's AMAT, Facebook, Google, Intel, Microsoft, Micron, and Lam Research. Same group, semiconductor equipment manufacturer as Applied Materials, already reported earnings. That was one of the clues that AMAT would report a positive earnings surprise. These two companies are almost direct links to each other. They are in the same business and they're both exploding. Lam Research has gone from under 100 to over 200 since the power gauge turned bullish. Market agrees with the model, so when XLK gets oversold, you can buy XLK or calls on it, but you're increasing your leverage and your profitability if you go into the best stocks. And at that point here in June and then again in July, the best stock in there was Lam Research and, as well as Applied Materials. Relative strength buy signals came at 142 and then again at 152 on the way to 210. So if you follow the discipline, the earnings surprises will work in your favor and you're in the right stocks on the long side. Now, energy went into a downtrend in late January, early February, and the relative strength to the S&P turned negative. It was under persistent distribution. We got relative strength sell signals. They work as well in the ETFs as they do in stocks. And then something changed. Energy broke the downtrend as crude oil went above $50 a barrel, then went above 55, traded up to 57 the other day. And now you have persistent accumulation. So when it's in a downtrend, as it was in July, rather in 2014 and 15, or then again in February of 17, you're looking for bearish stocks based on the power gauge rating to buy put options. And one of the favorites that we recommended was Schlumberger. Ahead of the earnings report back in April, 2 months after the sector turned bearish, we got a relative strength sell signal at 78, about a week ahead of the earnings that were due out in April. Negative earnings surprise. The stock dropped from 78 all the way down here to 64 before it really bottomed out. Another relative strength sell signal after an earnings report, rallies a bit, goes down again, and then yet again, right here on the right side of the chart, even with crude oil above $55 a barrel, Schlumberger is making new 52-week lows after a negative earnings surprise and a relative strength sell signal. These trends persist, but now that energy is in an uptrend, we're looking for buy candidates. So Valero is one of the stocks where the power gauge rating and the large cap energy has gone positive. And look at the accumulation. You got the bullish personality change a couple of months ago. Just in the last week and a half, the power gauge rating has turned bullish. You got a relative strength buy signal here at about 77, trading now at 82. And we made this our bullish stock of the week in Market Insights, my weekly market newsletter, and recommended this bullish vertical call spread on Valero. Buy the 81 call that expires on December 29th, sell the 87 call against it. You reduce your cost from 219 down to 176. So you have the potential to make a very significant profit, because that spread could widen out over 200% on just a 5-point up move in the stock between now and year end. So if you think energy is turning around, look for the strongest stocks. Valero is already making a new all-time high. You want to be in the leaders when a formerly weak sector or industry group turns around. So what's got a bullish rating in addition to Valero? Marathon, Petroleum, Devon Energy, Phillips 66. Look for the leaders on a pullback. Use these vertical debit spreads to have a low-risk way to play the upside. Now, we talked about industry groups as well. We rank them the same way. Power bar. We want the industry groups where there are more bullish than bearish stocks. So we're going to zero in on construction and building services. We could have been looking at semiconductors or integrated oil for the bullish case. And on the bearish side, we're going to look at consumer staples with no bullish stocks, and in this case, 6 bearish. So in construction, you've got Beazer Homes. We're going to see another one at the end of the webinar, D.R. Horton. Beazer has had a bullish power gauge rating, bullish personality change, so the dynamic duo is strong in a strong industry group. Therefore, you want to buy the oversolds, and when you get an oversold and Chaikin money flow is green, not red, that's the opposite of the Chaikin bearish money flow sell alert. We call this stealth buying. You want to buy with the smart money that's buying down here. They're not selling in here, they're buying. So look what happens. From about 1950, you spike up to 21, pull back, positive earnings surprise, the stock spikes up to 23 yesterday. There's your exit. Trade over, you're in at 19 and change, out at 23, and then the profit taking comes in and you get a pullback today. Now, let's look at the downside. Every week in Market Insights, we identify 3 strong and 3 weak industry groups, and then 3 stocks within those groups that have bearish or bullish power gauge ratings. So less than a month ago, we identified consumer products, miscellaneous staples as a weak industry group. Kimberly-Clark has been a dog, pays a good dividend, so a lot of people are attracted to it. Newell Brands, very acquisitive consumer staples company, was trading at 40.37. Look what happened on November 2nd. Remember, this is October 22nd. So 10 days later, Newell reported a negative earnings surprise. The stock gapped down 26% on heavy volume. And it's kept going lower. Why? Because analysts are lowering their estimates. Now, that was preceded by an overbought sell signal at the $42 level. So if you follow the discipline of trading weak stocks and weak industry groups on the downside, you're going to occasionally get lucky and be in a position on a stock like Newell ahead of a bearish earnings surprise. Now, playing good defense is absolutely critical. In these webinars that friends of mine give, the emphasis is on finding the big winners, whether you're on the up or the downside. We like to focus on defense to end the webinar. Now, what does playing good defense means? Well, Herb Greenberg, who's on CNBC and used to write for TheStreet.com, penned an article on CNBC.com in January of 2014, almost 4 years ago, saying it's the stocks you don't own that matter. Now, what did he mean by that? Well, he meant that if you can eliminate the bearish rated stocks from your 401k plan, the stocks that are most likely to go down, take them off your bullish radar screen, use them on the short side, you're going to improve your performance. It's like weeding a garden. If you take out the weeds, the garden's more likely to thrive. So avoid weak industry groups and stocks in that group. Know what stocks not to buy, and we're going to look at a couple in a minute. Improve your performance by eliminating bearish rated stocks from your 401k plan. Use put options to protect your portfolio if the market rolls over, and absolutely positively do not bottom fish. I famously said bottom fishing is the most expensive sport in America. Now, what do we mean by bottom fishing? We mean looking at a stock that's making a new 52-week low and thinking that we're smarter than the market, that we can call the turn. Or looking at a stock that's making a double bottom, which very often is a bullish pattern, and thinking that it's time to buy. Well, if the power gauge is bearish, you do not want to bottom fish. It's very expensive. And here are some examples of stocks you didn't want to own. Now, in this case, we're leading off with General Electric, which has been in the news. It didn't have a bearish power gauge rating. The rating turned neutral, but it's been underperforming the market for over a year, and therefore it was eligible for these relative strength sell signals. This one came above 28. This one came at 27 and change. This one came at 23 and change. This one came at 22. This reemphasizes the point I made earlier. It's never too late to sell a stock that's going down without positive fundamentals. So you could have avoided this whole disaster in General Electric. Been a lot of chatter on CNBC. Jim Cramer admitted that this is the worst investment decision he's made in a very successful career of stock picking, hanging on to this in his charitable trust. You can avoid this by following the discipline. You do not want to bottom fish in stocks that don't have a bullish rating. TripAdvisor, another stock with a bearish rating for over a year, underperforming the market. So the market is agreeing with the model. Institutions selling, sell signals along the way, and right before the latest earnings report less than 2 weeks ago, an overbought sell signal on a new 8-day high at about 38 and change, negative earnings surprise, and the stock drops all the way to 30. This is what the discipline can do for you as an options trader. Now let's go back in time to 2014 when the energy stocks turned bearish in late August, early September. This chart actually begins in December of 13 and ends at the end of 2014. Diamond Offshore saw its power gauge rating at the bottom of the 1-year chart turn bearish at a price of 60 in December of 13, ahead of the peak in energy stocks. Someone knew something about offshore drillers because Transocean also turned bearish then, symbol RIG. So in the 1 year that we portray on the chart, Diamond Offshore went from 60 to 30. Remember, this chart ends December of 2014 when the energy bear market was in full bloom. It had already dropped 50%. And people were saying on CNBC, it's made a double bottom. This is the time to buy it. It's a good value. It'll turn around. Well, let's update the chart. Here's a 1-year chart as of today on Diamond Offshore. It finally did bottom out at $10 a share between May and July of 2017. Do not bottom fish. Nobody knows where the bottom is. Wait for the power gauge and relative strength to turn bullish. Wait for the institutions to accumulate it. Then you've got a shot at making money. If you do want to catch a turnaround, here's how you do it using the Chaikin methodology. Buffalo Wild Wings had a bullish rating, then it broke down, underperforming the market. And just 2 weeks ago, after a positive earnings surprise, the power gauge turned bullish because that's one of the 20 factors in the model. Analysts started raising their estimates. And then if you bought that dip back down to the 21-day average because you liked the stock and the power gauge was bullish, you got lucky because a private equity firm said they'd be willing to buy Buffalo Wild Wings above 150. So the stock spiked up on the opening 25% 2 days ago. Now, how wonderful is that if you're an options trader? That's how you spot turnarounds, not by bottom fishing. You wait for something to turn bullish, relative strength and money flow, or the power gauge. Now, I'd like to end the webinar by asking you to look over my shoulder at how and why I pick my bullish or bearish stock of the week every Sunday. We're going to look at two examples. A short recommendation in Allergan Pharmaceutical on September 8th, with the stock at 233.55, ultimately bottomed out below 170. And a buy recommendation on 9/24 on DR Horton, a home builder stock, at 36.90, peaking at 47.92 and creating sort of a frosty atmosphere in the Chaikin household, and I'll tell you why. So what was I seeing on September 8th? I was looking at Allergan, which is a drug company with a very profitable drug called Restasis that treats dry eyes. My wife actually uses it under patent lawsuit from generic drug stock. So what did they do? With institutions selling it, bearish power gauge rating, underperforming the market, they try to pull a fast one. They sold the patents on Restasis to, I have to laugh, a Mohawk Indian tribe in upstate New York under the theory that Indian nations are sovereign and can't be sued. Well, that ploy didn't work, but when I saw the overbought sell signal and the institutional selling, I said, this is crazy. Let's make this our bearish stock of the week. 233.55. By the way, they've lost that lawsuit. So Teva Pharmaceutical and maybe Mylan are going to probably come out with a generic version of Restasis. And the stock dropped because people just didn't buy into that ploy. Stock dropped all the way below 170. So that's what I was thinking. Now on the long side, 2 weeks later, I was looking at strong industry groups. Construction building services, as we saw, has been strong for well over 6 months. I had read articles that home builders that catered to first-time home buyers were doing well because millennials are moving out of the basements of their parents' houses and buying homes. Do you know the reason millennials are buying homes? If you do, type a big M into the question box. This one is going to surprise you. Millennials are buying single-family homes so they can have dogs, because in most of the rental apartments, they're not allowed to have dogs. This is, in a poll that was done, the single biggest reason that millennials gave for buying houses. They want to have their pets. So on 9/22, I was looking at a stock with a bullish power gauge rating in a strong industry group, outperforming the market, big institutional buying, had been preceded by an oversold buy signal here at 35. It was trading at 36.90. It had just pulled back to its 21-day average. I said, buy the stock. Now, my wife, Sandy, actually bought it. She saw that same pattern. She was monitoring the stock. When it spiked up to 41.42 here, she sold half her position. Very nice profit in just a month, a little over a month. And then when it got up to 44, I said, you know what, Sandy, you probably should take the money off the table and sell the other half. Well, you can imagine that dinner conversation hasn't been all that jovial because the stock has traded straight up to 48. So I've learned not to mess with her. She very often doesn't tell me what position she takes, because even with everything I've learned in 50 years on Wall Street, Sandy does a better job, and you can too. If Sandy can do it, you can do it, because she had no background in stock trading. She just follows the disciplines we've outlined in this webinar. So we've covered the 5 keys to successful options trading. Absolutely critical to not bottom fish, to play good defense and avoid the landmines that destroy portfolios. All of this is in what we call Chaikin Analytics for iPad and desktop. Now, in May, Benzigo, which gives out FinTech awards now for the last 3 years, it's a news gathering service in Detroit, growing like crazy, creating news articles. In the category Best Ideas Platform, 20 entrants. Chaikin Analytics won the award for Best Ideas Platform. Very proud of our team, contributed to that success, 25 people here in Philadelphia. Now, Chaikin Analytics includes this 20-factor power gauge model. It's our core intellectual property. It also includes something we haven't covered in this webinar, our stock discovery engine, and that's what we actually won the award for Best Ideas Platform. The same way Spotify finds you music or Netflix finds you stocks based on your preferences, you enter a symbol into the stock discovery engine, it comes back with 5 stocks just like that based on 60 different points of comparison. And it also suggests swap ideas. So it's a very powerful idea generating tool. It's fast, it's reliable, and it enables you to generate new ideas on both the long and the short side. Now, you get Chaikin bonuses if you subscribe or when you subscribe to Chaikin Analytics. The screener that we've showed you and the Options Play module, which we license from Options Play, that gives you high probability options ideas. So Chaikin Analytics, normal price, list price, $2,195 for an annual subscription. Now, here's what Jim Cramer live tweeted about Chaikin Analytics on October 28th when I was doing the same presentation that you've seen, looking at the factors in the power gauge. Chaikin Analytics model is the best. Use it at my old hedge fund. A wonderful endorsement from a really smart stock picker. So as a webinar special, we'd like to offer you a $300 discount, reducing the price of Chaikin Analytics to $1,895. Go to chaikinanalytics.com/expert, sales@chaikinanalytics.com if you've got a question, or 877-697-6783. Now, additional bonuses are intraday charts, so you don't have to jump off to your online brokerage platform to see what's going on intraday. Our earnings alerts, remember how powerful they were at predicting positive or negative earnings surprises, and my weekly market insights with the bullish and bearish stock of the week. One testimonial from a subscriber, I think that's all I need to prove the point. Ken H. became a Chaikin subscriber on January 4th. He gave us this testimony on July 30th. I've been trading stock options for many years without much success. On January 4th, I found your system. I started the year with $235,000. As of today, my net liquidation, $1,205,000. I would not have been able to achieve this without your system. Now, Ken H. took advantage of our one-on-one coaching. When you subscribe to Chaikin Analytics, you get small group tutorials 3 times a week. These are webinars where multiple people are on, and our customer success team teaches you all the features of Chaikin Analytics. Get unlimited coaching and support, and if you need it, one-on-one coaching. Ken H. took advantage of that with one of our options specialists. He bought options on Boeing right before a 30-point move based on that buy signal. And you also get my colleague John Schlitz's daily morning insights, which tell you what happened overnight in Europe, to the dollar, to crude oil, what's going on pre-market. So a full comprehensive research capability bundled along with Chaikin Analytics. So I'd like to offer you a fast action bonus. If you subscribe by midnight tonight, we'll take an additional $100 off the price of Chaikin Analytics, saving you $400, reducing the cost to $1,795. And everybody who subscribes tonight will get a one-on-one conversation with me. Very valuable. We've done hundreds of these, and they really work in terms of focusing you. We don't make specific recommendations, but we'll talk about option strategies, stock strategies. So the fast action bonus expires at midnight. Take advantage of this, save $400, and get a one-on-one phone call with me. I'd like to thank you very much. Turn the webinar back to Joe Bicella, who's going to put the link to our fulfillment page in the webinar chat box and wrap it up.
All right, great. Thank you so much, Mark. And again, thank you everybody for joining us. Remember that offer is for $1,795 for a full year to Chaikin Analytics. You can join us again. The information on the page. In fact, let me go ahead and pull up that fulfillment page in one moment. If you click on the link, I chatted that out, as Mark just said. I chatted out the link right to the website. That will take you to the fulfillment. You'll see the information to get in touch with us, 877-978-6257. Again, keep an eye on the chat box. There's a link there with a number you can get in touch with us, 877-697-6783. This will be for an annual subscription. There's one more day, of course, this week. We have a lot of support webinars that we host here at Chaikin Analytics, including our onboard session. That is perfect for each and every one of you to help get up to speed. I saw a lot of questions in the Q&A window about the signals. We cover those in depth. So please make sure to join us. Again, chaikinanalytics.com/expert. We'll send you a link for how to join that session. You'll be all set. In the meantime, again, you can give us a call. I saw a few by the way, a few other stock requests. If you'd like to give us a call and review those, 877-978-6257, or again, 697-6783. In the meantime, everybody have a wonderful evening. Keep an eye out for the recording tomorrow. But until then, we'll see you on tomorrow's onboard session.